Hi everyone, this is Rob Roy of LA Wave Options and welcome to TradeFinder Live. For those of you that are new, we have new people every week, give you a little bit of a rundown on how the process of TradeFinder will work. But first of all, we have to show you this wonderful disclosure / disclaimer. And it is important. So if you are new with us tonight, take a screenshot of it, read it in detail in your leisure. I'll highlight a couple things that the powers that be want us to share with you. Number one is that we are not registered to give individual investment advice in the United States. And because we have a lot of international viewers and a lot of international subscribers, any pricing that we're talking about is assumed to be in US dollars unless denoted otherwise. So those are the two most important things they want us to share with you. But again, read it in detail when you get a chance. So with that said, let's take a look at the current chart of the market. And here we are. We got just a little bit overbought. In fact, this will tie in with what I'm going to share with you from our website here in just a few minutes. But we've gotten just a bit overbought from the 10-day moving average yesterday. So I'll just walk us back a day here. And you can see that we had gotten a little bit of separation. You know it, those of you that have been here. What is it? Just say it along with me. No security in any time frame gets very far away from its 10-day moving average, right? How many times have you heard it? I know you've heard it a lot. And as I say every time, it's not the last time you're going to hear it because it's one of the truest rules that exist in the world of trading. So we got a bit overextended, and plus we had this gap here, and we're in gap city, right? We got all these gaps, and that always makes you a bit nervous. So it was time to close out a bullish position that we had on. There's other considerations as well. And then today we had a pause day, which is what you expect when you get into an overextended or short-term overbought scenario. One of two things happens. Either the security, whatever it is, in this case the SPY, will move back down towards the 10-day moving average, or it goes sideways and allows the 10-day moving average to catch up. But all you have to do, just pull up any chart of anything and put the 10-day moving average on it, and they all look like this. They hug the 10-day moving average. So when there's separation, it comes back to it. Here, got overextended to the upside, boom, right back down. We got overextended to the downside, boom, right back up the next day. That's what I'm talking about. And you'll see that over and over and over again. And this will help you with short-term timing of trades, both entries and exits, if you follow along with that. And it doesn't matter what time frame. If you're trading really short-term, if you're trading futures currencies in a short-term time frame, still works the same way as far as the 10-day moving average. Now, the difficulty becomes, the temptation is when you get overextended like this to short the market, right? I mean, that's the temptation, is that you want to go ahead and short. So you're right here and you're seeing that separation. You're like, oh man, I want to go short. We're going to come back down. Not necessarily. You don't always necessarily come down. Sometimes it just goes sideways and consolidates. And then as it gets close, that run could continue again, especially if you have some evidence of strength building, as we do. Look at the SPY. You can see here that even with today's sideways resting day, the ADX is still curling to the upside, and it's about to break 20, which means it's about to break into a scenario where we go higher from here. And I know a lot because I read all the YouTube posts. I read every one of your comments on the YouTube videos that we do, every single one of them, except the dumb ones, but I read I read all of them. And I know that a lot of people are surprised that the market is where it is, and it would be very surprising with everything going on with the election coming, et cetera, for the market to power higher from here. But we're getting awfully close, and like it's right there at 20. Just look at it, it's right there. And if it breaks above that and we continue with the separation between the two directional indicators, the DMI is a very reliable confirming indicator with Elliott wave. Elliott wave is the best, but the DMI is a very good confirming indicator, and that gives us pretty good confidence that we're likely to break through this and continue to move to the upside. So since we're talking about the market and the alert that I wanted to share with you on our website has to do with the SPY as well. I'm just going to go ahead and break over to that and kind of tie these two together because there's a number of reasons. One of which is it has to do with the market. The other is it also has to do with how we trade at Elliott Wave Options. If we have a situation where, and there's a really good learning lesson in here too, so there's multifacets as to why I want to share this one with you. But if we have a position that starts to go against us and we're at a loss in the current alert, rather than just following some system where you have some arbitrary number like boom, if you hit a 50% loss, get out, take your loss and go. And you're paying no attention to the pattern, you're paying no attention to what the market's doing. You're simply following some sort of a system that somebody created and said, that's a good system. Look to make it 100% when you're right. Cut your losses at 50% when you're wrong. Well, you know what that is? That's a slow bleed. That's stabbing yourself with a pen until the little droplets add up to you bled out. That's what happens to your account. Your account just slowly bleeds away and then it's gone. It doesn't work. It's great marketing. It sells books and seminars, but it's not effective. It's not an effective way to make money long-term in the market. The way you make money long-term in the market is to find a system, test it, put the work in, put the hours in, test it, back test it, and then trust it. And that's the key. You got to follow it. You got to trust it because things don't go straight up. If you have a bullish trade on and your patterns are telling you that we're going to continue to go to the upside, it's not going to likely go in a straight line higher. There's going to be some down days in there. Don't let that shake your confidence. If you have really done the work, done the research, and you trust the system that you've created, then trust it, follow it, knowing that it won't be right 100% of the time because nothing is. But if it's wrong, then what do? That's the key. That's the adjustment process. So let's go along with this. And on our website, we list every single alert that we send out. And we also show this, I call it the dot plot because I'm making fun of the Federal Reserve with their Fed funds rate dot plot thing that they have. But it kind of is in a little bit. And it shows the profit loss every single day. It's mark to market every single day. We show you where every single alert stands every single day. If there's an alert service out there such as ours, and we're more than alert service, we're education as well, that's more transparent than ours, please let me know what it is. I'd love to see, because I think we're as transparent as you can possibly be in the world of trading. And most people are afraid to show stuff like this because it highlights where weaknesses lie. Well, look, you can see here that the position was down at one time 162%, and then we got it all the way back to a 5% gain, and the recovery occurred quickly. So let's walk through the process of how we got there. So our initial entry was on September 4th, and it was just one contract. So we're kind of dipping our toes into the water based on, you may have seen this on YouTube where we were talking about this super cycle. The super cycle that we have in the SPY going all the way back to 1993, where you can, boy, that spurs some conversation as well. Like, why are you doing the SPY, the SPX? I know all that stuff. I know the SPY hasn't been around as long as the SPX, and the SPX has been around longer. I mean, come on. But we're looking at patterns. It went sideways, and then we had a clear impulse move to the upside. If you can't see an impulse move breaking out of that sideways stuff, then you need to go back and learn more about technical analysis in Elliott Wave before you start questioning patterns. But here was the impulse move to the upside, and then we had a really nice ABC flat, classic stuff. So there's a complex wave 2 in the super cycle, and then we took off again. And so we had hit this wave 3 extended target. It's unusual for an extension to go to 261.8. It happens. It happened in the NASDAQ back before September 11th to the downside that time. So it does happen, but these are extreme levels. So you get to the point where you see, all right, we've had a 261.8% extension, and it was a pretty vertical move, even on a monthly chart. Are we due for a rest? Well, that's what we were looking at. Okay, so that was the potential move here. Now, does that mean that we can't go to the next fib level? No, we can go to the 423 level if that's what the market wants to do. That's the next level. That's a little more rare, but the levels exist for a reason because they eventually get hit at times. So we looked at that and said, okay, we may be done with this run for a while, or at least due for a pullback. That was the reasoning for buying a put. So we bought the November put. You know, we moved vertical, not the 45-degree angle that I like. It made sense to go ahead and put the put on. Well, then we get to September 18th, and you can see on the chart, we've moved down. So there we were on the entry at 361. We went straight down right afterwards. So you're probably thinking, what a great move. That put's doing extremely well, right? Huge move to the downside. That put should have made a bunch of money. It didn't. In fact, the put, believe it or not, the long put was losing money. And this is really where people get into their conspiracies of the market is rigged, blah, 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 etc. The market isn't rigged. I really don't believe the market's rigged, but I do believe you have to fully understand all aspects of the market, and you have to understand the Greeks, volatility, all those variables that go into an options price. You have to understand those. It's so much more than just the directional move to generate profitable trading. And this is a perfect example of that. This is the lesson that I wanted to share with you on this. Here we have this big move to the downside. You would have thought that would have been a home run put, right? The put's actually losing money at this point in time. And so, well, you might be thinking, well, okay, the VIX cratered, right? The VIX cratered, you bought the VIX at the top and it cratered. That's why the put lost money. All right, well, let's take a look at the VIX. There's a tiny bit of validity to that, but not a ton. So September 8th or September 4th through September 18th. So let's walk back over here and take a look at the chart of the VIX. And so I've left it here on September 4th. That was the entry. Look where the VIX is, 30. Okay, so that was 30. Now let's go to the 18th. So we move forward and the VIX has dropped a bit. Oh, there we go. Here we are on the 18th. All right, well, the VIX is at 26. So it fell 4 points. It went down, but not a lot. Not as much as you would think would be necessary for a position that dropped this far to still lose money. So we're all the way down here. We've gone 30 points down on the SPY, and the put is losing money with a 4-point drop in the VIX. So you're thinking, yeah, that's not enough in the VIX. They're playing games with the options. So what do? Well, we adjusted. So we added another put. So dollar cost averaging, basically. So the initial put was 208, and we added another one for $1. So now we have two with an average cost of $1.50. So if the market continues lower with the dollar cost averaging, and we get any sort of a move back to the upside with the VIX, then we're good to go, right? It made sense at the time. It was sound thinking. Well, now we move to October 6th, and we had this zigzag pattern that moved down. The zigzag pattern completed. Here we were down at support. Now the question became, is this going to be an extended C wave? Are we done? Are we going to this previous 4? Is the wave 5 finished? And we're going to the previous 4? Remember that we had that target on the super cycle, the monthly chart of the SPY, and that's still holding firm. Are we coming down to the previous 4 just in this daily wave 5 pattern? We've only had a 78% extension, so the wave 5 could go further if it wanted. So here we are, the zigzag is complete. We bounce. Is it going to be an extended zigzag? Well, at this point in time, it seems to be clear that it's not. And watch what has happened to the value of the puts. They're now worth 40 cents. 40 cents. And we're still trading below, well below where we started. Remember, we're back up here at 361. when we entered because we hit that target. We're now trading at 335, 25, 26 points lower, and the puts have gone from an initial price of 208 to 40 cents. So let's take a look at our VIX chart and move that forward to October 6th. There we are. Where's the VIX? It's back to 30. It's back where we started. So the VIX is back at 30, where we were when we entered. The market's fallen 25 points. Yay! We made money, right? No, we lost money. Why did we lose money? The market makers are taking all of the premium. They're taking all the vol out of the put options. What does that mean? Well, if you watch those things and you understand those things, it means the market's going higher. That's what it means. There's no other, I mean, the VIX is exactly where it was when you started, and the market is 25 points lower. You should have at least made a little bit of money. It hasn't been but a month. But no, they went from $2.08 when we started. The VIX is exactly where it was when we entered, and they're at 40 cents on a downward move. You should have made money. So you have to understand, what is the market telling you? The market is telling you we're going higher. So what did we do? All right, we said, okay, fine. Let's take that 40 cents, what we can get out of the puts, and realize that the likely next move is to the upside. And as hard as it may be to believe that the next C wave target in this qualified zigzag, this big zigzag that started all the way back at wave 4. So all that is a complex wave B with the zigzag in it on the way down. So we have a complex wave B right at the 61.8% level, my favorite level of all in zigzags. We're going to be releasing our newest educational course on zigzags soon. I can't wait for you to see that. If you haven't watched any of the educational stuff or taken advantage of any of the educational stuff, please watch this one. I promise you it's going to be fascinating and will change your life from a trading standpoint. It's just the greatest pattern ever. I love zigzags. I'm so excited that we're presenting that to you next. But with this wave 5 move, or excuse me, the C wave move to the upside, potential target at 381. Well, we'll see if we get there or not, but that's the next target. The market will tell us. Well, we exited this yesterday. Why did we exit it yesterday when we're not anywhere near that 381 target yet? A couple of reasons. One, this is an adjustment trade. We were down, remember, 162% at one point in time in this trade because we started with an option, we added another one. So both of those options lost value. That's why we went past 100% on the loss. Well, then we made the adjustment and we went long, and there the market is going. It's continuing up, just what the options part was telling us, along with that qualified upward zigzag. The downward zigzag was done. This one here to the downside towards the end of September was complete, and we're moving to the upside. But we're going too vertical, and I don't like that. I don't like it when things go vertical. We talk about the rocket effect a lot from the launch pad pattern where things go straight up, and when they go straight up, quite often they come straight back down. I'm not saying the market's going to come straight back down. Maybe the market just goes sideways here and consolidates. I don't like these gaps. I'd feel better if those gaps got filled for a further move upward, but they don't have to get filled now. They'll eventually get filled, but it doesn't have to be now to continue to the upside. But we had a big spike in volatility yesterday, huge move up in the market. Yesterday, over over 6 points on the SPY. So it made sense. Let's take that extra vol that was now injected into the calls, the same stuff that was taken out of the puts, injected in there, and in a very short period of time. Look at this. From October 6th through October 12th, 6 days, 6 calendar days, we went from 162% loss to a little over 5% gain in 6 days. That's why we do the adjustment process and don't just simply walk away from a trade that is losing and move on to a different trade. But the important thing that I wanted you to understand here is the fact that you can be right and lose money at the same time. And that's what occurred here. We were right on direction. The market moved lower. Yes, the VIX went down for a period of time, but we offset that by adding the contract. So we dollar cost average to take advantage of the drop in the VIX. The VIX went back up. We were still below our target, and then the trade was a big loser. So we just turn around and follow along with what the market is telling us, that we were going to go to the upside. And whether or not that made any sense to you at the time that we're going to go higher or not, that's in fact what happened. So I wanted to share that with you. I hope hopefully that one was a good learning experience. And I would imagine that if you've been trading, you've seen that. When I used to do live seminars, of course, you know, the world has changed, but even before COVID came, the world had changed, and we're doing webinars now. We don't do very many live events anymore. But when I would always get that question of, I was right on direction. I'm buying calls and puts, and it was right on direction and still lost money. Well, what can you do? One of the reasons that we like to do our out of the money butterflies, but I don't like to do put out of the money butterflies. So you might be asking, well, if that's your solution to it, then why didn't you do an out of the money put butterfly? Well, it makes me nervous to do out of the money put butterflies because the market moves down so fast. And butterflies are time decay neutral in the beginning, become helpful, and it's better if it takes a little time to get there and doesn't occur overnight. We all know the market can drop significantly overnight if it wants to. So I'd like to do out of the money call butterflies, not as many out of the money put butterflies. So that was the reason that out of the money put butterflies weren't chosen. But that's pretty fascinating, isn't it? Imagine you've experienced that at some point in your trading and wondered what's going on. And that's when people just throw their hands up and say, you can't make money trading. It's rigged. You can't do it. You can. It just shows you how important knowledge and education is. And beyond that, experience. And I always like to say that you can get education in a lot of places out there, but we really try to focus on this as far as what we provide for our subscribers at ewotrader.com is experience. You know, knowledge and education is one thing, but there is no substitute for experience. And living through stuff like that in the past and losing money on things like that, you remember those lessons, right? A lot of people say you learn more from your losses than you do from your winners. So, all right, let's get back to where we are currently. And you can see with moving to the upside here in the market, we're a bit overextended, but boy, that DMI is starting to look good. Now, the positive directional indicator did tick down. So a little bit of a pause in the buyers today. So the question will become, because you can look back and see that the directional indicators don't move nearly in as smooth a line as the ADX. And that shows you that they're far more responsive to the short-term movements in the market. The ADX lags a bit, but not the directional indicators. So they're far choppier because they're more responsive to what happens day to day. But the fact that the ADX has moved between the two directional indicators, the negative went down. So there was no resurgence of bears today. The buyers were just quiet. So the buyers took the day off. The sellers didn't try to reassert themselves. The ADX has moved between these two directional indicators. And once this situation here resolves itself, the overbought, short-term overbought scenario, we could very well be building the momentum needed to break above this high. That's the key, right? When you're watching this chart, the key is that the market has to break above this high before we can even consider this C wave target up here at 381. And I just don't think the shorts are going to give up lightly on this. So that was another reason why we went ahead and took the calls off, because we could be battling this little movement here for a while. And it may be a very short period of time. It may only be a couple of days before we're ready to take it on, but it also could be longer. And we really wanted to take advantage of that IV spike in the calls, which was all given back today. So those call options that we sold at 740 are trading. I'll give you the closing price. They were down about $6 at one point in time. So a huge difference. And yeah, it closed at 612. So It was the right thing to do, at least as of now. And we're not abandoning that upward zigzag that's qualified. We just wanted to take that gain, let this shake itself out, let the market calm down a bit, and then we'll re-enter and look to take another move to the upside from there. So that's our plan for our subscribers with SPY. So that's the market. That's an update from our website. Let's take a look 2 weeks ago, and hopefully you've been following along with this. Our record, if you have been watching TradeFinder Live, is pretty phenomenal with our case study considerations. There we go. That was our strangle that we had back on 29th. So let's go back there. So there's where we were, and we had this pattern here, triangle pattern, and we talked about the potential breakout. This is what we do in the volatility strategy, and we have an awful lot of these on right now in the volatility strategy, and that's about as good as it gets. So we've gone from 270 to 310. Last week we talked about, all right, there was a nice breakout. Are we coming back down to test it, or just got a little bit of a surge here? So now we've moved 40 points on the breakout. So at some point in time, you got to decide, when do you want to take your profits, when you want to close it out. I want to highlight this as well, just to remind everybody that with our alert service at Elliott Wave Options, we don't just send out alerts on the entries. We send out, you could see all the adjustments that go along with it and the exits. In the end, it's your choice. It's your account. You can decide when you want to close positions out. You may be happy with your profit before we send out an exit alert, but we don't leave you hanging to just make the decision on your own. We will give you guidance there. And again, it's your choice whether you follow along with it or not. I just wanted to highlight the fact that we do that, because I know there's alert services that send out entries and then you take it from there. Like, here's something to look at, do what you want. Well, we give you some guidance from start to finish on that. So Alibaba looks really good. Now, last week we took a look at MPWR, monolithic power systems. So here's where we were last week, 10.6. Now watch what happened. Hopefully you were following along with this one too. We talked about how good that DMI was. It's just fantastic. Now watch. Separating even more, and boom, relabeled. Why? Look back. It hit the target. It hit the wave. Look at that, 61.8%, 62% extension. Elliott wave Fibonacci stuff dead on. A bit vertical now. Honestly, I just much prefer this. If you're fairly new, I talk about this a lot. Not quite as much as the 10-day moving average thing, but I talk about it a lot. Much prefer stocks to move in a 45-degree angle. You can see why. The move just lasts longer. It lasts longer, and the corrections are not as volatile. So the fact that we went vertical here makes me a bit nervous, although the DMI that's about as good as it gets. And so now we've relabeled, we're now in a wave 3, and the DMI still looks fantastic. So we're likely to go higher from here, but there's that separation again from where we're trading and the 10-day moving average. So, I mean, if you follow along with this one, have you taken your profits yet? So that's the same scenario that we've had on both of the previous two, right? With Alibaba and MPWR, when do you want to take your profits? So when we send out alerts to our subscribers, we give them that information. But there's two pretty good examples of positions that have moved really, really well over the past couple of weeks. So let's go ahead and see if we can identify a case study consideration for tonight. Hopefully it'll work out as well as those last two have. We're keeping our streak pretty strong here from the beginning. And wow, There's only 3 impulse stocks. I really thought there was going to be more. And I want to highlight this as well. It may not be a big deal to you, but it is to me that I don't Monday morning quarterback this stuff. So I don't look ahead to see what's coming up. I think it's more valuable to you. We're doing these as an educational resource, right? So I think it's more valuable if the thought process is discussed out loud with you, so you can hear, the things that I would think in my head when I'm looking for trade considerations, so you can follow along that way. So I don't pre-look at these. Right off the bat, all 3 of these look interesting, because sometimes we'll have some results and I'll say, I don't even know that symbol. I've never traded it before, but these are 3 really interesting ones. So we've got Lulu, Trade Desk, and PayPal. Somebody, was it last week? It might have been in our subscriber call Thursday night, because we do an event just for subscribers. It's interactive, where we talk about all of our current case studies, and they can ask questions. Our subscribers can ask questions regarding any individual case study. So it's really been a positive experience for subscribers. It may have been during that call. Somebody asked about PayPal recently. But let's take a look at Lulu. It's been on a heck of a run. So this is, what do they call it? Athleisure. Now it's not yoga wear anymore. Now it's athleisure is what the whole space is termed. And it has to do with the fact that so many people are working from home. That's what the marketing is. That so many people are working from home now that athleisure has become stuff that people wear during their workday while they're working at home. And you can see this big move. Clearly Lulu had a really nice move off of the March bottom. Didn't really get hit that bad, did it? I mean, it fell like everything else, but not too bad. It's had a big move to the upside here, and part of that has been their expansion into men's. They started with just basically they started with women's yoga pants, and their company has grown from there. They had almost nothing in men's clothing. You could maybe find a pair of shorts here or there, depending on what store you went into. But then they expanded their men's line a lot, and that was great timing, because all that occurred just before all the COVID staying home, closing everything down happened. Everybody work at home, and so it took off. So that had a lot to do with this last leg of the move to the upside from a fundamental standpoint. So what happens when a wave 5 completes? When you come back to the previous 4. So here's really basic Elliott wave stuff here. When a wave 5 ends, you go back to the previous 4. Remember when we were talking on the SPY, when that zigzag completed, we were wondering, are we going to the previous 4? So when you see this, what bothers me is this is a mono wave. So I want to see what this corrective move has been. All right, look where we are right now. Dead on the 61.8% corrective move. So what does that mean? That means this is absolutely a qualified zigzag with a potential target lower with a 61% retracement and a 100% extension is highly possible. And so you have to be aware of that. Then you come down and look at the DMI and say, but wait a minute, the DMI looks good. The ADX is curling up. The positive directional indicators moving up, and the negative directional indicators moving down. All those are really good signs. As you know, I would have preferred to see the ADX drop below 20 before it started to curl back up. I would have liked that better. But here's another thing that we don't talk about this very often with the DMI. But when you're talking about convergence, divergence, you can see here confirmation where we have, this is the top of the ADX at that high. Then we make a new high, and we get a new high in the ADX. So basically, the ADX is confirming this move to a new high on the wave 5. So that's not, if that had been the opposite, if they had diverged, in other words, the high in the ADX was lower than the high in June, but that the stock price made a new high, I wouldn't touch this with a 10-foot pole. Be like, this is a zigzag to the downside. Yeah, we completed the retracement of the previous 4, but then we just bounced and we're coming lower. It's qualified to do that, but all you have to do is just wait just a little bit more. And if we get to that 70%, that was one of Elliott's rules, if we get to the 70% corrective level, then that downward zigzag is no longer qualified. And that tells you that we're likely to go higher, maybe even make new highs and continue to run on Lulu. And you could take a, if you wanted to be super aggressive, you could go ahead and take a shot at it. Let's look at where the 10-day moving average is. Really not that overbought, just a tiny bit of separation here, not too much. So if you wanted to put on an aggressive position, I like to term these speculative. When you do this, it doesn't have to necessarily be considered a speculative trade, because we do have one of our confirming. Let's see what the CCI is showing here. It's getting there, right? Remember with the CCI, we did this educational series called Trade Scan. You can access it on our website if you haven't seen that before, where we go into depth. We did a webinar on every single one of these indicators, each individual one. So you learn about them. And with the CCI, the important thing is the history. Where has it been? There's a trading range here over on the right-hand side, but where the ADX, the range is 0 to 100, it's a fixed range. It's not like that on the CCI. The CCI normally moves between 100 and minus 100. Some will say 200 and minus 200 if you wanted to broaden it a bit. But that's just generalizations. Every stock is different. Every stock has its own range. So when you're looking at the CCI, you want to see what are the resistance and support levels on the CCI for that stock. So it's okay to take a look at the scale over here, but don't use that as a hard, fast rule. It's more of a guideline here. And we're getting near, we're not quite there yet, but we're getting near there. I just think that you could be a little more, again, if you wanted to be aggressive, go for it. But I think the more prudent thing, that looks good. Money flow looks good, looks really good. So if you wanted to be a touch aggressive, just be quick to make your adjustment if it goes the other way, or close it out if you're more comfortable with that. I'm just trying to share with you, it's not always just walk away from a losing trade and forget about it type of scenario. I just would feel better seeing a couple more days. It wouldn't take much more movement for you to have a little more confidence that that qualified downward zigzag, you know, you've seen how good it's done, how well it's performed on the SPY to the upside. So I just want to see this. It may very well be that all we did was, and it's a coincidence that we're at the 61.8% level. It's already done what it's supposed to do in the Elliott wave pattern of coming back to the previous 4. So again, I'll wrap this up with saying it would be an aggressive move to go now. You could be a touch more conservative and wait a little bit. I still think there's, if it does go up to 70% on the corrective move up here to the upside, there's still going to be plenty of room for this to run, because it's probably going to go to where that wave 5 is at least 100%. Personal preference. That one's up to you. I'm going to leave that with you. Let's see what these other two look like. Maybe we'll have a, whew, wow. These vertical moves, man, it's crazy what's going on in some of these stocks right now. Leave the DMI on, take this other stuff off. That's really vertical too. That 10-day moving average, it's not as overbought as you might have thought with that vertical move, is it? And you know, sometimes stocks can stay overbought or oversold for a period of time, but usually when you kind of throw in the towel and say, that's it, I'm done waiting on it to come back or go sideways or consolidate, you throw in the towel and you're like, I gotta go, you can't take anymore. that's when it corrects. That's the moment in time when it corrects and comes back down. You know, it's just that the human emotions of, you know, the fear of missing out, as they talk about, and they've been talking about a lot in the market. The other thing is that the ADX is almost to 40. Now, that doesn't mean it has to stop here, but it's telling you there's still good separation. We could go higher on this. We really could. However, it's telling you strongest part of it doesn't mean the whole move is over, but the strongest part of the move is about over with here. But we're trading at 650. We have a wave 5 target of 800. I'd say there's probably a pretty good chance that we get there. I don't know what the options look like on this. Again, my discipline wouldn't let me chase this. It's just a touch too vertical. Yeah. There's liquidity in the options. They're super expensive though. Wow. Never mind. Those are incredibly expensive options. I know it's a $650 stock, but holy cow. Yeah, you're gonna have to look at a call spread to do anything on that. Whew. Super expensive options. Let's see what PayPal looks like. See, this one looks a lot more doable to me. It's not just because we looked at it last week. We've been watching this. This one is on the watch list, actually, even before it showed up on the search because a subscriber asked about it. So when we do our interaction, if you have stocks you want us to look at as a subscriber, we do that as well. So taking this off, look out. See, here's the ADX dropping below 20. I like that so much better. And then coming back up and breaking above 20. So it's got just a little ways, but look at the separation it's building between the two directional indicators. It's starting to look really, really good. And we put the Elliott wave pattern on here. 50 points still to go to the upside, almost 45 points, if you will. That just looks really good. Possibly run into a tiny bit of resistance right here. We got up there in early August, fell back, made new highs, but couldn't hold it, and made a corrective move in September. And now we're back trying again. And my mentor used to say the third time is a charm. So when you have something that tests the support or resistance level on the third try, whatever happens there is going to be the move. In other words, you would say that if we break above this high, you're going higher. You're off to the races. If you fall back down, if it acts as resistance again, that's it. You're not likely to move to the new high. So anyway, I always think about that when I see stuff like this where you're testing a level on the third try. But boy, it maybe even tomorrow you might get the signal out of the DMI to move into this. This one looks the best of the three, in my opinion, just because the other two are, well, Lulu, concerned about that 61.8% level. So another day or two that could eradicate that, and then that would be green light to go there. This just getting a touch vertical. I'd like to see that consolidate a bit, maybe do something like this that we did in August, where we just hold that level, go sideways a bit, and allow it to continue to move higher. A little concerned about the height of the ADX. But the PayPal one, to me, looks the best. Let's see if we do our combo here. And these are pre-computed searches. If you get the ProfitSource software program, ProfitSource.com, and you're an Elliott Wave Options subscriber, you have these pre-computed scans, which are basically the parameters that I look at. They're all included in there. So everything that you're seeing, every single alert comes from these. And so you can take this and combine it with just a regular Elliott wave pattern. So we can look at consolidating stocks within wave 4 buys, which those are the ones that are moving to the upside now, and see if we can find some sort of a corrective pattern within the wave 4, the start of the wave 5, that could give us continued move higher. So notice that there's 81 wave 4 buys, there's 77 consolidating stocks. But when you combine those two searches together, you get 4. So see how much time this saves you from looking at chart after chart after chart to try to find opportunities for trades. So Autodesk really has done nothing for quite a while. You can certainly see why it's on the consolidating stocks list. But now the ADX looks like it's starting to wake up. It got awfully low there, all the way down to 10. And now it looks like it's starting to wake up. A little bit of separation here, but you can see the snaking that's occurred. I call that snaking when the two lines keep crossing back and forth. Like a snake going through the sand. That's what the pattern looks like between the two directional indicators. We're getting a little high there on the CCI. So might need a little bit more momentum out of this ADX, or a little bit of a rest here to break through that. I think we can probably do better than this. But another one that you could put on your watch list. We have a couple other ones that we're going to look at too from previous weeks, but let's just look at the rest of these first, and then we'll do that. Equifax, very similar chart. I don't like the sideways stuff. You've heard me say that before. It's not my favorite thing to look at. That doesn't really excite me. Verizon. What I'd like to see is some sort of a triangle forming. Now, Verizon, the interesting thing about this, look at that support. And that goes all the way back as a support resistance line pretty much the whole year. Even before that, all the way back here, this line right here has acted as support or resistance, 59 for whatever reason. So bounced off of it numerous times. Then the COVID thing hit, broke below it, and so how's resistance, right? Old support becomes new resistance. And it was resistance in April, in May, sideways for a while in August, broke above it. Now it's support again. So from that standpoint, that's interesting. But you would want to see. Now the other thing that's interesting is this is almost that blast off effect where it's really sideways, the launchpad effect, if you will, where we go really sideways and then we take off. But I need to see that first. That's the most interesting one of the 3 so far. And yeah, there's no interest in this at all. So, I mean, it was take a shot and see if we could find maybe a good triangle in an upward pattern, but they're all just sideways. And that's when you're looking for stocks with a low ADX, that's what can happen. You're either going to find the triangles. Here's a good example of a triangle. Look what happened here. There's your triangle right there. And there's the breakout. Boom. So that's more like what we're looking for, but here we just have a dead sideways consolidation. I don't like anything about that chart. So I would say that for our case study consideration this week, we'll look at PayPal. We'll keep an eye on that one. We were going to look at a couple more from last week, LW. And I believe we wanted to see it break this. When you're looking at the DMI, that positive directional indicator coming down is not that much of a concern because we're right at resistance of that previous wave 5. I don't like to see the negative directional indicator moving up though, because that means the sellers are feeling empowered at this point in time. Let's look at the moving averages. Tomorrow will tell a lot on this as far as whether or not we're able to, in general terms, looking at the DMI, you say, okay, it looks fine. The ADX is going up. It's between the two directional indicators. But looking behind the scenes, just would have rather not seen that negative curling up. Other than that, I would have been concerned about it. But we've had a nice move to retest that wave 5 from where the ADX was before. See what we were looking at last week. 6. And we had that doji, and we wanted to see that ADX cross above, so it did. And then we're sitting there waiting. We just need to see it. If it breaks that 3, then you're all clear. You're going back to 95 and probably 100 at that point in time. But be cautious just for another day or two. Let it play itself out. JCI. We were looking at that from a corrective move because I wrote my notes break of the 50-day moving average. Well, certainly didn't do that. See if it's going to come back down. Well, it hasn't done that yet, so that's nothing. And then COLM, we were watching as well. Not a whole lot going on that one either. Yeah, it did make a new high from last week, so that's certainly not in corrective mode. So it's pretty difficult to look for stocks in a corrective pattern when the market has been moving to the upside. You always want to keep what's going on in the general market in mind, but we'll do PayPal. For this week. And with that, with a few minutes left, we'll take some questions. As far as the stocks like Cloudflare, the symbols net, Datadog, Twilio, those types of things, is just if the indicators are followed, they show up. So Datadog is DDOG, right? That's the symbol. 67%, so there's plenty of room to go. It's consolidated for a very long time. There was a first hint there. The money's been moving in since September, so it broke above that. Tested it for a while. It does look like it's ready to go. See what the DMI says. Yeah, the DMI looks good too. Surprised this one didn't show up on the search. One of the indicators must not be fully in line here, at least yet, but it does look pretty good. That one looks really good, actually. Just trying to see if in that move higher, if there's no, we did this flat stuff here, which is okay. Flats are okay to watch during consolidation before the takeoff move occurs. I just don't like to trade them. That looks good. I'd have to do some more analysis to find out what of our indicators wasn't showing up on that one. Let's look at net too, because it's one of the big ones in that. Now that you just can't chase that. Talk about takeoff. You said they're ready to take off. That one took off. There's your rocket ship right there. Holy cow. I'm assuming that was an earnings report. I don't know what happened there. It'd be good to see if Datadog followed along in that kind of move and you could catch it. But as far as this point right now, there's no way. And maybe it runs up. Maybe it goes straight to 100. And if you're in it, I hope it does for you. But my discipline cannot let me chase that move. There's just absolutely no way. If it goes sideways for a while and the 10-day catches up, that's fine. So when I talk about this, I want to make sure I'm really clear here that it's not just the vertical move that bothers me, that it has to be retraced. It doesn't. It can move vertically and then go sideways and then take off again. That's fine. What bothers me and what I know will be resolved one way or the other is this separation with the 10-day moving average. That will not stay like that. It just won't. So which way does it get corrected? Well, you don't know. There's no way to know that I'm aware of. So that's why I say I can't chase that, because I don't know. It might come straight back down. So you go in and you enter tomorrow, opens to the upside, and then throughout the day it tanks back down. But if Datadog wants to follow along with it, yeah, that would be really cool. Yep, Craig, you were right. Put debit spread would have worked on the SPY. Look at SLV. So for our subscribers, we had a long position on SLV. Then we put on, when this triangle formed, we put on a strangle, which worked out fantastically well. So the profit from that strangle mitigated the loss from the long position. And now we have added to the existing long position with a kind of a fresh slate, if you will, looking for this to continue back to the upside. We'll see how it plays out with all the liquidity going on, with rates ticking up. It's hard to imagine the metal's not going to the upside, but that's fundamental stuff. And that's why we don't put fundamentals as our lead indicators. We use fundamentals as backing and confirming indicators, but not leading indicators whatsoever. So I don't know, it looks like to me it's still in a nice uptrend. Right there, it had to move down today, but at this point in time, there's nothing there that concerns me. Also understanding that this was another reason that we added to the long position, not just from a dollar cost averaging standpoint, but following triangle rules. That when you get a breakout from a triangle, you go back and retrace the breakout. That happens. Just like gaps get filled, that happens. Same scenario is that you don't know when. You don't know when gaps are going to get filled. You don't know exactly when the retracement will occur. But once a breakout from a triangle occurs, you move back to the point of the breakout. So silver is going to move back to 25. Then we'll have to see what happens from that point in time, but that's the scenario that we're looking for there. Going back to TTD, you're wanting to put a spread there. You could do one, but you're going to have almost no delta. And the reason that I say that is because I still have it up on the screen, but in order to put on a spread with enough delta to make it worthwhile, in other words, how much movement you're going to get out of the position versus the risk that you're putting in there, is just not good. I mean, you're going to have just to give you there's a $10 spread, and I'm not talking about the strike spread. $10 it would cost you for a 0.06 delta. You have to have a massive account to trade this stock. $10 for a 6 delta, it's not worth it, man. It's just not worth it. Sometimes you just have to walk away. And I have no doubt that stock may run to 1,000. I don't have any question about the possibility of that. I'm just saying it's almost untradeable. And the fact that it's so expensive probably means that's what's going to happen. Same thing that happened when they took all the premium out of the puts on the SPY. When you see stuff like this, it's probably going to happen, and they make it to the point where it's almost impossible to make enough money to make it worthwhile to do it. Because if you're wrong, $10, that's amazing to me, really. Baidu's one that shows up regularly. Let's take a look. Woo, that does look good, doesn't it? Wow. Where's the ADX? Huh, that must be on the consolidating search, I would think, because that's a really low ADX. Let's check the options. How expensive is it? But hopefully you could see that before I drew it. As I've mentioned numerous times, my main goal of doing this, of sharing this education, is really one simple goal, is to get people to look at charts differently than they did before, just to expand other things to look at. Whether you big believer in Elliott wave, the DMI, the other indicators, patterns, triangles, all of the Elliott wave corrective moves, zigzags, at least be aware of them so that when you look at a chart, you don't just see a bunch of lines, the pattern actually comes to you. That's really my main goal, because that's what helps you become successful in the world of trading, is seeing the patterns and not just listening to what's on TV or chat rooms, the Robinhood guys, all that stuff. And there's December options. That looks good. That's a good call. Good call, David. Got to break the 25 rule just a touch on the delta, but not a whole lot. It's not that bad, not for a $130 stock. That actually looks really good. And we've had some of our best triangles ever on Baidu. Multiple 100% gainers. That is extremely rare with the triangles. 30 to 70% profit on each one is the trading range, and that's pretty consistent. Every now and then we hit 100% one, but I think it might have been the very last one we did was a 300%. Now, I don't know if that was the last one. There might have been one since then, but the 300% gainer was right when Trump announced the tariffs on China, and anything China related tanked. And we had a strangle on it, and so it was a 300% gain virtually overnight. But that's the beauty of having strangles on. If something unexpected happens that nobody knew was coming, you can profit from it. But that's a really good call. I like that one. I like that pattern an awful lot. If you had to come up with a negative, the only negative is that it's not a huge triangle. It's only 15 points, but that doesn't mean it has to stop at that move. It could continue to run. There's a head and shoulders for you there, if you want to know what one of those look like. Good call. Generac, can you give me the symbol, Saren? What's the symbol on Generac? I don't know that one offhand. Steve, on net, a cheap put, if you wanted to just, so I've done that before, not as a subscriber trade, but just in my own account, like with Tesla. I want to see Tesla. Has that broken out yet? Because holy cow, somebody hasn't asked that yet. Guys, give me the symbol, okay? Because I'm not familiar with all of these.
The symbol is GNRC.
GNRC. Thanks. I know a lot of them. I know most of them, but I don't know the symbol for every single stock in existence, especially with some that aren't commonly traded. It's still in a wave 3. This is not good though, right here. That has to get corrected. That at this point in time, it looks like that wave 3 is running out of steam. But as long as it holds above this is going to be support right here. As long as it holds above, say, 190, it could give this DMI time to resurrect here. We need that positive directional indicator to move back to the upside. It's not that unusual for it to be moving down with the stock moving down. The negative DMI creeping up is a concern. So I think that's a wait and see how it handles this. Man, it's right on this 10-day moving average now. So the 190 level, if it can hold that and bounce up, then you probably have a go signal there. I just don't think so at this point in time. Back to net with the potential for a cheap put, speculative trade. If you want to do that, just understand that it doesn't, that is awfully vertical, but it doesn't guarantee that we're coming straight down. It very well could. Let's see, what did it go up? It went up 10, 12, $13 in 2 days. It could come right back down at least half of that. It could come down $6 tomorrow, but it may just go sideways here and consolidate. So if you had some money that you were willing to lose and just wanted to try a speculative trade, just that's the thought process behind that. I want to look at Tesla. Wow, it still hasn't broken out yet. It's trying to the upside barely here, but golly, that just, maybe we're trying. It's just so good. Too expensive for a strangle, but when we get the twin butterfly education out there, then you'll see some more stuff like this. But what a great pattern. You could also let it break out and then follow the directional move once it breaks out. But it has to be confirmed, and that's not a good breakout out of that pattern yet. It did defy the market today, though, which is pretty interesting. Such a good pattern. Spotify, they were in the news today. What was their news today? This one could be getting interesting very soon. So it made a break today. We've got a little bit of resistance, but if that DMI sets up, this resistance isn't going to stop it at 300. because this is really setting up. Remember now, you can't just assume that ADX is going to break above 20, but look at that separation between the two directional indicators. That was starting before today. Let's go back. Not too much, actually. Just a little bit of separation. And then today, the buyers took firm grasp of Spotify. When we get that ADX to break between those two, get up to that 20 level, you have plenty of room for that to move. That's a good one to keep an eye on. So, you know, keep an eye on Spotify as well. One more and then we'll wrap things up. WKHS, thanks for the symbol. So here, when you see this, this is quite interesting. This is actually a good one to finish on, because we have a really nice triangle here, right? Beautiful triangle. Broke out. This is exactly why I say you have to have the follow through or confirmation day, because you had a big breakout day, no confirmation, fell back down. So where are we? Right back to the point of the breakout. So the question becomes, was that a false breakout and we're actually going down, or up here, shake out the weak hands on the move down, then run, which happens a lot too. So that one would be really interesting to keep an eye on too, just to see what happens from here with that move. But those volatile days are pretty interesting for a $25 stock when you're getting 10% moves on 3 days in a row. It's pretty fascinating. And we had this this is really good. See, here's my favorite pattern. This is exactly why. So here we have this straight up move, and then we have this consolidating triangle. You've heard me say this a million times, but this is my favorite pattern for triangles, bar none. My favorite directional pattern is a zigzag. My favorite triangle pattern is when you have a vertical move followed by a consolidating triangle, because then so off we go to the upside. That happens all the time. So that's a great example of it. Now it's consolidated again, and it's consolidated right at the top of here. So it may break again. That's going to be really a good one to keep an eye on. Thanks, everybody. Sorry if I didn't get to your questions. You look like you had a lot of them. I hope you got a lot out of this session. I felt like it was a pretty informative one. Look forward to seeing you again next week. Take care, everybody.